All right, welcome to Talking Investing. I'm Tom, and as always, this is not financial advice. Today, I want to bring you an update on Bitcoin and the Bitcoin miners, as well as a few other very big things that are happening in the market right now. This morning, we got CPI inflation data. Tomorrow, we're going to get the results of the Fed meeting, so those are always big events. I want to talk about how they're affecting Bitcoin, how they're affecting the market, and later, I'm going to give some potential price targets for Bitcoin in the near term. Please remember, if you enjoy this content, please smash the like button, and also, more importantly, it helps the channel a lot if you hit the subscribe button, and you can hit the notification bell so you never miss a video. Okay, so first of all, let's get started. Let's take a look at what happened yesterday. Okay, so this was the big board for the Bitcoin miners yesterday. You're going to see it is completely in the red, and all but one of these was actually double digits in the red. So across the board, this was a very, very tough day for the Bitcoin miners. Bitcoin had a flash crash Sunday night. We're going to look at the chart a little bit later. It retested those lows on Monday during the trading day, so you can see this is the result. Greenwich actually looks like the best one on the chart. There were just a couple under 10%. Greenwich was at down 9.55%. Core Scientific was down just about 8%. Everything else was double digits. Some of these were down over 20% on the day. Hive Blockchain was down 20.48%. TeraWolf was down 22%. So those are some of the medium market cap Bitcoin miners. You also had Bit Digital down 18.5%, but even the large Bitcoin miners, the three largest Bitcoin miners by market cap, Marathon was down just under 13%, Riot was down about 11.5%, and Cleanspark was down just under 15%. So again, those are the three biggest by market cap, and they all had big down days. I want to take a look at a chart from last week. So this is my chart that I make every weekend of how the Bitcoin miners performed over the previous week. So you're going to see last week was a very good week for a lot of the Bitcoin miners, but some of the Bitcoin miners down here at the bottom of this chart did lag. So for some of these Bitcoin miners, a down 20% day really didn't put a dent in what happened last week, but there were several Bitcoin miners that just Monday alone took out the entire week from last week. A lot of these underperformers are the microcap and the nano caps, but some of the medium size, Iris Energy was up 4% last week, Cypher was down 1% last week, and Hut was down 10% last week. So if I look at those three, if we look at what they did last week compared to what they did yesterday, so Iris Energy was down almost 14% yesterday. That by far more than erased their entire week last week. Cypher was down 15.8%. That erased their entire week last week. And then, of course, Hut was down 10% last week, and now they're down another 13.7% yesterday. Now, they did have their merger of equals, and that did affect their stock price over the last few weeks here. But, those are two big down days. So for those three stocks in particular, and for some of the other ones where this gigantic down day took out last week's entire activity, one of the things I'm trying to do is see, is there any opportunities across the board where some of these stocks got oversold just because the entire group got decimated yesterday. So I do think it's worth taking a look at what last week's activity on the whole versus just yesterday's activity. Now, so far this morning, the market just opened as I'm making this video. Almost everything is green at the moment, but it is by far not yet making up for these gigantic moves to the downside yesterday. Bitcoin got down to about $40,100 yesterday. It did flash crash on Sunday night. Basically in one 15-minute candle, it got down to about 40,400. We were trading up as high as 44,500 within just the last few days. So you can see, in light of a 10 or 11% pullback in Bitcoin, these numbers actually make a lot of sense. So we're going to have to see where Bitcoin goes from here. Again, we will take a look at the chart at the end of the video, and I'm going to go through a few potential price targets that I have my eye on. Okay, quickly, this morning CPI data came out. You're going to see that November's CPI was 3.1. Again, this is the inflation data in the United States. So the consensus expectation was 3.1%. Last month, we were at 3.2%, so we did come in at 3.1%. For the first 5 minutes, the market had a very big reaction to the upside. These knee-jerk reactions, I talk about this every month. Be careful of the first 5 minutes or the first few hours. It takes the market sometimes a day to digest this information, because outside of this top-line number, there's an awful lot of information as you drill down into this inflation data. So I will say my quick takeaway on this is it's always good news that we hit our target of 3.1%. Core inflation was a little bit higher. Core inflation remains stubborn. Shelter remains very stubborn. So there's a few numbers that maybe people didn't love in this report, but overall you can see we are now 6 months into, you have to go all the way back to June. We've been under 4%. We got all the way down to 3% in June, 3.2% in July. October, we got back to 3.2%, and now we're at 3.1%. So these numbers are looking very healthy. There was a big underlying fear. I can tell you, while consensus was at 3.1%, that was the expectation. An awful lot of people were afraid of this report over the last few days. There was a fear that based on some of the other data points that were coming in, that we were going to get an inflation number that was hot, that was worse than expected. And of course, that is everybody's biggest fear. That's the market's number one biggest fear, because we don't want to see the Fed have to take a shift in what they're doing. And anything that would give the Fed cover to raise rates again is obviously, that's the number one thing right now that would terrify the market. But I don't think this report does that in any way, shape, or form. This is the second best number we've had in, a year and a half, and it met expectations. So to me, across the board, I think we're going to see that as the market digests this is kind of going to be a non-event. But that's exactly what we want these to be. So that, and in my opinion, that's actually a good thing. I do not think that the anticipation of this report had anything to do with the Bitcoin flash crash. There's a lot of other theories as to why that happened. I'll give you my thoughts as we go through the chart, but I will tell you guys, essentially, we have been talking about on the channel for the last several weeks. We are in extremely overbought territory. I know I get a lot of comments that say, oh, ignore the technicals. The technicals don't mean anything with Bitcoin. Bitcoin does its own thing in a bull market. Well, some of that is true, but if you look at what the technicals show you, historically speaking, even at the peak of Bitcoin bull markets, ultimately when Bitcoin is this far overbought, there is some type of pause, and typically there's a pullback. We just finished our 8th weekly candle in a row that was a green candle. That's pretty historic. That hasn't happened in about 6.5 years. Even when we finished the 7th green weekly candle in a row, which was a week ago Friday on the live stream, we talked a lot about the fact that even 7 weeks in a row hadn't happened in over 3 years, and that the technicals were extremely, extremely overbought. Now, with Bitcoin, they can stay overbought a little bit longer than with some other assets, but it is no surprise at all that we had a pullback. At this point, it was approximately a 10 or 11% pullback. I will talk about some other price targets in a few minutes when we get to the chart. This is an estimate on what the probability is that the market has priced in for a Fed rate hike in this coming meeting, which we're going to get the results of tomorrow. While nothing is certain, the market's pricing in a 98.4% chance that the Fed is not going to raise rates tomorrow or cut rates tomorrow. I'm going to keep my eye on this tool. I'm surprised it's even 98%. I would think at this point it would be 100%, with potentially even a little bias to the chance that they would lower rates, although I really think there's no realistic chance that they would either raise rates or cut rates at this meeting. We do have to wait and see what they say at 2 o'clock Eastern time tomorrow, but this looks highly probable to be what we've been expecting for the last several months, which is no change at the December 13th meeting. The question the market's really asking is, when is the Fed going to start lowering rates? So I will have my eye on this watch tool over the next 2 or 3 days. I think this is going to start to swing more towards the Fed lowering rates, not obviously at the December meeting, but more towards that March 2024 meeting. I think the market's going to get back to a point where it's pricing in that it's more probable than not that the Fed lowers rates in March. Now, I don't know that they're going to lower rates, but I think that's going to what the market's expectation is going to be, and that is how the market trades. So obviously, we'll see what happens. None of us know the future. We're going to have to see what the Fed does, and then more importantly, we're going to have to see what Jerome Powell's talking points are. Jerome Powell's speech typically has more influence on the market than necessarily what the Fed did at this meeting. So that will be tomorrow afternoon. The U.S. equity markets will still be open while that is going on, so we'll have to see what the price action is at that point, but I would just give you a heads up or an alert that that is coming tomorrow, and that is oftentimes a very volatile event as well. Okay, let's take a look at the Bitcoin chart, just so we can see what happened over the last few days. This is the Bitcoin chart on the 15-minute time frame. So you can see even on the 15-minute time frame, this entire crash, this was a flash crash. This was one 15-minute candle. So you can see from the top to the bottom of this candle, this was almost a 7% move to the downside in 15 minutes. We did recover even inside of this candle, back up to around $41,700. But if you look at this gold line at the top of the screen at $44,418, that's where Bitcoin was when the US equity markets closed on Friday. So remember, this is the activity that happened over the weekend. So from Friday's close to Monday's close, Bitcoin was actually down about 8% in that period of time. So that's why I'm saying, the Bitcoin miners were a little bit between a 1x and a 2x leverage to the downside off of that. So, those are not unexpected results. And in addition to that, I don't think this move to the downside should really be unexpected. Now, to have it happen in a 15-minute candle, we don't always know when that's going to happen. When Bitcoin runs, we're just not sure when we're going to get that pullback. But the one thing that has been historically true, Bitcoin is very volatile, and these gigantic run-ups usually take a breather at a minimum at some point. So some sideways activity would have been a minimum, but more likely a 10 or 15 or 20% move to the downside is typically the result of these gigantic runs to the upside, and this was an 8-week run to the upside. So you can see from the low until where we're trading now as I'm making this video on Tuesday morning, Bitcoin's up about 3.5% off of its lows from the day yesterday. It's trading a little bit sideways right now. We'll see. The market is still digesting this CPI inflation data as we're speaking. Some of the Bitcoin miners are green. A few of the Bitcoin miners are a little bit red right now. So it's too early in the day. We're going to have to see what happens. Then I just want to spend a minute on the Bitcoin one-day chart. So you can see from the peak that we reached just a few days ago, this candle wick does not show up on most other charts. It's showing up on the Coinbase chart, but for the most part, Bitcoin's actually recent high was here just a few days later. So we've had about a 10.5% pullback. So a 10% pullback is one of the normal things that can happen. That's actually a very light pullback. You can see this is only one day. So I would not be surprised if we do have a little bit more of a pullback. If we look at the daily RSI, you can see the daily RSI peaked on October 25th. We're now a month and a half away from that, and we still have not really had a reset on the daily RSI. If I zoom out a little bit, you'll see that traditionally when we get overbought, which is over 70 here on the daily RSI, and in January we did get all the way up to almost 90, but from 90 we had a full reset, which is down at the bottom here at 30%. We then got back to 70 and had another. This one was not quite a full reset, but we did get down to 35. And then the next time we got to 70, we got all the way down near 20 on the RSI before we reset. But this time we did get back up into the high 80s, and we really haven't even gotten under 50. So we bounced off of 50 once, and we may bounce off of 50 again. So we could go sideways in this range on the daily RSI, but you can see ultimately if you go further and further back, each time we hit overbought territory, at some point we tend to reset down to oversold, somewhere around 30. So I do think there's potentially more room to the downside. That is not a guarantee by any stretch of the imagination, but historically that's more common. The other thing worth noting is we did have a bearish crossover today. Now this is not yet confirmed because we're in the middle of today's candle. So if this stays, then we will have had a bearish crossover on the MACD today. The last time we had a bearish crossover on the MACD, in fact, the last 2 times over the last couple of months, we really did not have a pullback in the price of Bitcoin at all. We had sideways activity, so that can happen. So just because we had a bearish crossover doesn't mean Bitcoin's about to plummet. But it is noteworthy between this bearish crossover and between the fact that we still have not really had a reset on the daily RSI, whether it continues over the course of this week or at some point we are due for a pullback. So I will continue to say I think we should keep our eye on both the upside and the downside for Bitcoin. Now, I do think Bitcoin's going to hold most of these gains. I think there's a few very natural lines for this to pull back to. There's a purple line here at around $37,885. This was resistance for a couple of weeks in the month of November, so this is a decent line. So from Bitcoin's top last week down to that line would be a 15% pullback, so that's a pretty natural place. So I would have my eye potentially on this line. If I just go a little bit further down, a 20% pullback would be somewhere just under $36,000. So any of those numbers are entirely possible. So my point is I would not panic, or at least I will tell you I will not be panicking if we hit one of those lines of support. In fact, I think it would be healthy if we bounce off of a line of support, if we have a little bit of a reset on the RSI and some of the other technicals. then I think we have a lot more room for the next leg up. I do still have a $48,000 price target for Bitcoin in the short term, meaning the next 4 to 8 weeks. But I'm not going to be surprised if inside of that we do retrace our steps just a little bit. So it could go either way. You know, Bitcoin does run. We're now 8 green candles in a row. So there's the potential for this to correct itself even inside of this 1 weekly candle. It's only Tuesday. I just wanted to point out some price targets to the upside and to the downside because I do think all of that is very much on the table, and we have to be aware of that so that panic doesn't set in if, you know, one of those two things happens. So that's what's going on with Bitcoin and the Bitcoin miners. Thanks so much for watching, and we will see you in the next video.